The topic for the presentation is comparative statement. Let us start. Comparative statement. A comparative statement is a document used to compare a particular financial statement with prior period statements. Previous financials are presented alongside the latest figures in side-by-side column. Moving on, let us try to find the answer for the question how comparative statements work. Here is the answer. Analysts, investors, and business managers use the company's income statement, balance sheet, and cash flow statement for comparative purposes. They want to see how much is spent chasing revenues from one period to the next and how items on the balance sheet and the movements of cash vary over time. Moving forward, here is an example for comparative statement. A manufacturer's cost of goods sold (COGS) increases from 30% of sales to 45% of sales over 3 years. Management can use that data to make changes, such as finding more competitive pricing for materials or training employees to lower labor costs. On the other hand, an analyst may see the cost of sales trend and conclude that the higher costs make the company less attractive to investors. Let's keep moving forward. What are the comparative statement limitations? Here are the limitations. Comparative statements are less reliable when companies undergo huge changes. A big acquisition and move into the new end markets can transform businesses, making them different entities from previous reporting periods. Moving forward, these are the steps in preparing a comparative income statement. Specify absolute figures of all the items related to the accounting period under consideration. Determine the absolute change that has occurred in the items of the income statement. It can be achieved by finding the difference between previous year values with the current year values. And calculate the percentage change in the item present in the current statement with respect to previous year statements. This is all for the presentation. I hope you had a good learning session. Thank you.